Today, folks, we're diving down into 3 stocks that are getting absolutely devastated on this recent earnings cycle, and we're going to dive down into these companies to see if their fundamental businesses are actually deteriorating or if these are the buying opportunity of a lifetime. Of course, we're talking about Meta, the biggest headline this week. We're going to be diving down into Shopify, which is actually rallying off its recent earnings, and then with some geopolitical events going on, we got to talk about Alibaba, a Charlie Munger favorite, as that continues to deteriorate to lows that I honestly could have never imagined. If that is a conversation you can appreciate, hit that like button, folks, because we're going to kick it off with, first and foremost, the biggest headline this week being Facebook Meta stock, guys, which in the last 5 days alone is down over 20%, hitting numbers below $100 a share today, which just absolutely blew my mind. I would have never imagined a stock like Facebook getting back down to a $270 billion market cap range. So what is causing this? Well, it's a combination of things. First and foremost, net income has been falling off a cliff. It is down by more than half since Q4 of 2021, which was just barely 4 months ago, guys. Diluted earnings per share have completely fallen off a cliff, and capital expenditures have gone through the freaking roof by 4 times. I mean, in Q3 of 2021, spending $4.5 billion to this quarter where they spent $22.8 billion, and investors do not want to see this in an environment where things are starting to slow down, where we could potentially be heading into a recessionary environment. And just taking a look at the advertising revenue by geography, this was actually a lot better than I could have anticipated, considering Apple has been, allowing people to opt out of targeted marketing so that they can't see any of your individual stuff that you're doing on your phone, so they can't market as correctly, meaning advertising dollars don't go as far as they used to. On top of that, people don't spend as much in this recessionary environment. A lot of factors coming into play, which we saw with Google, but still, nonetheless, their advertising revenue, guys, completely by geography, is still up way above kind of Q1 of 2022. Well, maybe not way above, but still at this nominal rate for this really kind of tumultuous year. So this is actually surprisingly good in my opinion. And the other good thing about this company that's kind of being underlooked is their daily active users is still going up across almost every piece of geography, which means that, Instagram, WhatsApp, Marketplace, all of their platforms are still growing. You think these things would have maxed out at this point, but nope, their monthly active users across all the spectrums are completely up here. And when we take a look at the average revenue per user, guys, again, in this kind of marketing where things just aren't moving like they used to, probably people spending less on marketing, we're still seeing a good nominal rate across every country for what people are paying for ads. Again, considering targeted marketing has been getting a lot harder. But one of the big primary reasons people do not like what Facebook is doing with these massive expenditures, all primarily just going into Reality Labs, which when we take a look at the revenue, guys, Reality Labs for this quarter, unfortunately, only did $285 million in revenue versus this time last year where they did $558 million, yet their expenditures on this have gone through the roof. This quarter, they're spending $3.6 billion, or that's the loss basically, and compared to this time last year when they only lost $2.6 billion. And a lot of people are concerned, and I'm kind of concerned here because I do love the Quest Pro, or the Quest 2. They recently came out with the Quest Pro, and it's unfortunately targeted toward a business-based audience, trying to take advantage of augmented reality and some of the more higher end features per se, whereas I think most people are like me and they're just playing games and they want a better experience for those games and when they're hanging out with their friends or going to parties. And I'm really concerned that coming into this holiday season at that price point of $1,500 for the Quest Pro, if they could have even just got it at $1,000 US, I would have been all over it. And I'm hearing a very similar story across the board. And considering that gaming segment isn't getting too excited about it, I'm really concerned about what those revenues are going to look like. So when it comes to Facebook, you're making this massive bet alongside them that this VR stuff is really going to take off into the future. And if that is something you believe in, this is truly a great buying opportunity. Now, if this is something you're fearful of, you're going to have to be a little bit hesitant. But even if they completely cut off Reality Labs, the fundamentals of Facebook have not gone anywhere. And in fact, they're still really robust. And obviously, I do believe as the market begins to turn around sometime maybe mid toward the end of next year, that this is really going to perhaps be a really good buying opportunity again. But it really hinges on these capital expenditures and VR showing some signs of hope with this new Quest Pro. Now, taking a look at Shopify, guys, this stock is up 15% since its recent last earnings, but year to date, along with Facebook, down over 70%. here, guys. Now, this one is a hard one to wrap my head around from a valuation standpoint because just driving down into these recent earnings, I mean, their subscription-based solutions are growing wonderfully here. This is like the main underlying fundamentals of their business, but they have merchant solutions, which we're going to be talking more about because the merchant solutions is where the real growth for this company is coming from. And then we take a look at gross profit after their cost of revenue. Currently for the 9-month end, they're doing almost 2 billion. Let's say they do 2.5. They could even get to 3 billion. It'd be nice in gross profit sometime, toward the end of this year, maybe early next year, because that means at a market cap of about 50, 60 billion, guys, they're trading at such a multiple even from gross profit. So this thing, even though it's down 70%, it's kind of hard to get a foothold on. They need a lot of growth to catch up to the underlying fundamentals still. But I really do love Shopify's business, and taking a look at where the growth vectors are coming from for this company, it has nothing to do with the base fundamental website. I think people are misunderstanding that all of the growth for Shopify is coming into these massive expenditures, which is what led the stock down to the level it's at. I mean, they invested billions of dollars into warehousing, but what's more intriguing to me is the launch of Shopify Capital, which they just expanded into Australia. And we can see they launched shipping in Italy and France, Shopify payments in Finland, Czech Republic, Switzerland, and Portugal. So they're really looking at global expansion here. But what I most find interesting, and this is something I see from having my own Shopify website, is they keep offering me money. And this is another risk factor for this company, but is also a huge growth vector considering basically at the end of August, Shopify Capital broke another record of 4 billion in cumulative capital advance since inception. So basically, they're loaning money out. If you have a website that makes money, Shopify is willing to loan you money at a percentage, whatever their interest rate is. And I don't know how they're doing this, but they've been doing it apparently pretty successfully. And I think that comes with risk, obviously, if people can't repay those debts back. But I think Shopify can actually analyze the businesses that they're loaning money to, which does alleviate some of that risk. But still, man, getting into payments and loaning capital in a business like this can be a huge growth factor, but also come with some kind of risk. They're just such a fabulous business model with a very robust underlying that subscription-based model, which we see with things like Adobe and Microsoft, which offer a lot of stability. So I want to ask that question to you. Do you think Shopify is a buying opportunity of a lifetime here? Do you think it's still overvalued? Shopify is the hardest valuation for me to wrap my head around. But let's talk about Alibaba here real briefly, guys. This is another stock that, I made a prediction that it wouldn't drop below the recent lows of that $76 a share when it really tanked. And here we are now sitting below it. This one I have got predicted horribly wrong because I was on the back of Charlie Munger. I really believe the fundamentals of this business, and with all these big billionaires taking a look at it, like the likes of Ray Dalio, it just didn't seem like you could do too wrong with the research they might have been doing. And I never thought this stock would dip below its recent lows of around $70-something a share. But here we are, down 12% from those recent lows back in March. But taking a look, guys, they do not have their recent earnings out until November. But when we take a look at the growth segments, China commerce has slowed down a little bit over this time last year, or this second quarter earnings of last year. And honestly, it's very similar to Amazon because they're still seeing a lot of growth in things like cloud segments, which has actually been growing pretty nicely at a 10% clip over last year. A little bit of a decline in digital media and entertainment. But this business, from a fundamental basis, just like Meta or Facebook, it seems like the greatest buying opportunity ever. But what this stock can just not get over is the geopolitical events and what basically is going on with their politicians there, like Xi Jinping getting reelected for a third term, which basically after the nonsense from last year of making crypto illegal, canceling Ant Group's IPO, basically just slaughtering the CEOs that are running these mega giant companies, locking down the country, not accepting foreign vaccines and having a zero, pandemic policy. And now, as we kind of head into the end of this year, it looks like he's really shifting tune because their stock market, the real estate market, everything is getting so devastated there that recently Xi Jinping says China and the US must find a way to get along. And I think this is them trying to start fixing, the political headwinds and give themselves a better light on the global stage. Just kind of reading into this, guys, after months of tension between Washington and Beijing over, what the US views as China's increasingly aggressive stance toward Taiwan and Beijing's refusal to condemn Russia's war in the Ukraine, Xi, who secured a third term as the Chinese leader on Sunday, has rebooked what he termed foreign interference in Taiwan and said China would never renounce the right to use force to unite the island with the mainland. The world today is neither peaceful nor tranquil, Xi wrote in a congratulatory letter to the annual Gala of National Committee on the U.S.-China relations. Chinese state broadcaster CCTV reported on Thursday, as major powers strengthening communications and cooperations between China and the U.S., we will help to increase global stability and certainty and promote world peace and development, Xi said in this message to the New York-based nonprofit organization. Xi added that China was willing to work with the U.S. to give mutual respect, coexistence peacefully, and find a way to get along in this new era. So when it comes to Baba Stock, guys, they got to get out of their own way with these crazy geopolitical and foreign endeavors. And if that ever happens, then I think Baba can start getting, coming back. Because, I mean, we were all worried about the depository receipts getting delisted and then them having to get listed on the Hong Kong exchange. But now I don't even think that matters anymore. I think everything driving Baba into the toilet is the fact of lack of foreign investment capital. A lot of foreign investment, guys, you have to have a good view. As soon as you come out of a good view like Facebook did, there's not much you can do at any valuation to get your stock to come back around. But again, if you believe in the long term that a lot of these geopolitical events will start to cushion out, we'll go back to a moderate level of tranquility in the markets over the next 3 to 5 years, maybe BAB is a good buying opportunity. But each one of these stocks have their own good and bad, their yin and yang to them. And I want to pass the question off to you. Do you guys think these stocks are buying opportunities of a lifetime, or do you think these are going to get hindered continuing moving forward? I'd love to hear about what you think in that comment section below, but stay cool, stay awesome, and as always, I look forward to catching you in the next one.